Good afternoon. My name is Michael, and I'm excited to be here with you this afternoon. Hello to new and old friends. I see everybody piling into the room here this afternoon, this morning, this evening, and I want to just welcome everybody for coming. Today we're going to talk about the Tachyon Warp and Tachyon Chronos predictive programs for trading with NinjaTrader as well as TradingView. And we're going to get right into it here insofar as just sort of laying down the gauntlet in terms of understanding timing signals, predictive timing signals, namely, and having a feel for whether or not markets are predictable in any way, shape, or form. It's sort of a question that people have been wrestling with for quite a long time. And I wanted to just sort of challenge us to keep an open mind and look at some signals today that have veritably nothing to do with any kind of data mining or processing or AI. They really are the, I believe, foundation for life. The ebbs and flows of economies and culture, the month-to-month escalations and de-escalations that we read about and hear. And so I just sort of want to challenge everybody to really take a close look at whether or not things are just sort of happening haphazardly or randomly, or whether or not there's this yin-yang, ebb and flow, sunrise, sunset balance to everything. And the first example that I want to look at is this chart for the E-mini S&P, and we'll be looking at a few other markets that utilize this tool. And I generally start out by showing this because people have a hard time conceptually with the idea of markets predictable in any way, shape, or form. And so I like to start out with this one because it's sort of a verifiable free approach that anybody can validate after the webinar. And the signals on this are based on something called the apogee and perigee. And before I go too much further, I'm just going to fill in some of the text here before I sort of come back into the theory of all of this. Let me just verify one thing. Today is December 4th. May the 4th be with you. Perigee is closest. So I have all these backwards. Forgive me. There we go. So I'm referencing a web page that is publicly available. There's nobody really hiding this information from anyone, but no one's really sure kind of what to do with it. Can you guys see that link in the GoToWebinar chat box that I just sent out there? And what's really interesting to me is that we have the dates now for the rest of the year and into next year. So if I hit 2026 and calculate, you'll see that we have the dates for January 1st, the 13th, the 29th, the 10th, the 24th, the March 10th signal, and so on. So when we come in and look at the signals, there seems to be something going on. There appears to be, at worst, a correlation, and at best, a causation between what's happening with the signals and what's happening with market movements. Now, the one that we've been following every 2 weeks now has been Bitcoin. And I want you to see what happens at those same signals. And again, I've got it backwards here. I've just got to flip them around. But Tim, take a look at what happens to the price of Bitcoin at these predictive future dates, right? And we already know, like we said, when the next date is coming. And if you had purchased Bitcoin at an apogee and sold it at a perigee, right? Let's make it very specific and very practical. Let's start on the 5th. So the price of Bitcoin was at $108,000 and some change. That was a $9,000 move. That was a $5,400 move from close to close. $5,600 move from close to close was a $13,000, almost $14,000 move. And then we closed below the moving average here for a $1,300, $1,400 loss. And if you shorted Bitcoin from November 5th until the apogee date on the 20th, that was a $17,500 winner. So 9, 14, 19, 29, 32, 42, 49,000 minus 2, let's call it around $45,000 net gain following the apogee and perigee event dates on Bitcoin. Now, why does this work and who is aware of it working? The first guy that I knew who really publicly didn't give a rat's patootie if anyone knew what he was doing or not was JP Morgan. So the very first guy who sort of leans in and whispers into the public ear is, oddly enough, one of the wealthiest people on its face. And that's a very strange thing. There are strange things that have happened in my lifetime that I sort of think back on and go, that was really weird. Nancy, what was her name? Nancy, remember Nancy Reagan? I found out when I was younger that Nancy Reagan, Just Say No to Drugs, queen of the conservative movement, consulted Joan Quigley, a spiritual advisor for guidance on her husband's schedule and political activities. After the 1981 assassination attempt on President Reagan, Nancy Reagan began consulting Quigley to help protect her husband and influence political timing, including dates for trips, press conferences, and even the president's cancer surgery. When I remember hearing that, I was feeling very strange. Like, that's very weird, out of character, doesn't seem to fit with what we know about that person. And this quote, I had that same sensation of something is wrong, something is weird. But when we come back and look at this, the second market now, it's even stranger to say that it's not working. In fact, if we scrunch up the chart and we go back and add more data to it, it didn't just start working this past year. It's been happening since coin was instituted. And so if I auto-focus the chart and we come back and look and see, Tim, this is something that's been going on for quite some time. Here's years and years and years of it back when it was around $5,000 or $10,000. And it's not just limited to Bitcoin. In fact, one of the markets that you and I have been tracking with these types of studies is Tesla. And if we just pull out the chart and look at Tesla over the last year, boy, it's hard to not see that a lot of the highs are the exact high and a lot of the lows are the exact low. Anybody have any questions at this before I continue and go even further down this kind of weird rabbit hole with you? Any questions at all? Okay. Now, there are for me, questions that arise from this, because these are based on natural laws. And in parentheses, I'll put laws of nature. This is the sun and the moon and the sky and magnetic fields and electric fields and all of these ideas and concepts, Isaiah, are meant to undergird the things that I'm about to show you intraday. So for example, when we look at gold on a daily chart using the warp program, which is neither solar or lunar, but based on data mining, Isaiah, it seems to have the same type of predictive effect in that we know the days in the future that are expected to be selling or buying. And can you see what happened at almost every one of the buying dates in gold that we've published a year in advance? What happened on the 14th, for example, and the 15th and the 4th and the 7th and the 18th and the 24th, the 27th, and now today is the next precursor, the predictive run until December 18th. So Isaiah, what I'm trying to do in this example when I'm showing you this weird thing is point to something happening at a deep level. Think of it like the foundation of time. Where does time, how does time arise as a causal force in world events? Is it something we can trust, or is it something I made up and pulled out of my guru butthole? Do you understand the contrast I'm trying to draw here? If there's something deep and primal and foundational and fundamental based on natural laws here, because time has this effect on human physiology and psychology, then it stands to reason if we're looking at a daily chart on the gold or Bitcoin or the E-mini S&P or intraday, for example, on a 1 minute NQ chart, that those same kinds of effects may be happening intraday as well. Do you guys see what I'm trying to get at here with this example? Okay. So when we started looking at this, when I started to see that there are, I think I went way too far over everybody's heads. Let me just step back one step. What I'm attempting to show here is the source code for predictive timing tools using ridiculous things that are highly accurate that no one is paying attention to. Does that make sense? I want to show you something that you can use for free based on the web page that I posted into the link that is predictive, meaning I can see the signals coming in the future. Isaiah, does that make sense? Len? I'm not selling this. I've literally given you the dates and times for the next 100 years worth of signals. Okay. What I want you to understand is when we're working with natural laws, when we're basing things on nature and not on gurus and not on AI and not on all of the influencers who have the latest, greatest ShamWow chimichanga indicator, there are innumerable things that emerge from that. For example, let me come back over here and see if I can point out something. I wanted to show you an NVIDIA chart. Everyone is talking about the AI bubble. And I'm going to pull out another chart based on natural law that I've been showing you guys for NVIDIA that also uses something very ridiculous that JP Morgan didn't think was crazy. And if you'll hang with me one more second, we'll peer down another rabbit hole together. Nope, I need phase 3 and not phase 4, please. There we go. Okay, and instead of blue, I want red. Come on, Mike. Phase 1, white. No, green. Phase 3, red. Red. How about that? There we go. Phase 1, green, green. Sweet. Okay. This is NVIDIA. NVIDIA, have you met Lydia? And so every one of these small green dots is a first quarter lunar phase. That is the moon 1/2 full. And Len, we seem to be having the same effect that we had with Bitcoin and the lunar distance. Does that make sense? What happens when NVIDIA has a green dot? What happens when NVIDIA has a red dot? And you'll see that a preponderance of these red signals are near the highs of these pullbacks, right? Does that make sense? Right before the market falls, even if it just goes sideways in a consolidation zone, it seems to be happening, Len, right around the red signals. So Bill, the chart that I just showed seemed to imply a correlation, if not a causation, between, on a daily chart at least, the inflection points of equities and cryptocurrencies. And I've given you the dates and times for the next 100 years and the previous 100 years to validate that. I can put any instrument in here and see if there's an effect. And the uncomfortable thing is there seems to be one. And now on this chart for NVIDIA, there seems to be one, because this is moon half full and moon half empty. Now, when we're working with these signals, Bill, the first thing we need to do when we're analyzing markets for predictability is move past our bias, right? And the first bias that most people have is this is impossible. Are you feeling that sensation right now? Wells Wilder missed a bunch of things. And no offense to him, some of the stuff he missed was pretty obvious in hindsight that I think I understand that he missed. Let me give you an example of one of the things Wells Wilder and W.G. Gann and other people, John Euler, missed. For example, when you're dealing with time signals in any ecosystem, we're going to look at intraday signals in a moment, NASDAQ and ES and gold. Every market, every time frame is subject to this. There's a book in the GoToWebinar chat box. Can you see it under handouts? I'm going to click on my copy of it and drag it over. Right there, it says it was published in 2017. Hey, Dave. So, Bill, when we start working with timing signals, yeah, sure. I did it all by hand too when I first figured this part out. I've been staring at this blade of grass now. I get very defensive, Bill. I don't know if you've noticed. I do have a relatively large chip on my shoulder, and that's on me. That's not on you. So apologies for that energy. Me and the therapist are wrestling with it. One of the things I started to notice was this. Whether we use data mining, lunar, solar, apogee, perigee, or vibrational analyses, any way I attempt to analyze a market, there are rules that start to emerge. For example, Bill, on my chart on page 27 of the handout that's been around now since 8 years ago, the following thing is true. When we arrive at a buying pressure day, like the green dots on my chart, And that signal candle, the one to the left or the right, if any one of these three candles have a high that is equal to or higher than the previous swing, the market tends to reverse or go in the opposite direction. Let me show you over here. Do you see on NVIDIA where that first quarter phase, Tim, is at the very tippy top, and it exceeded, Bill, the swing high of the prior swing, just like my diagram? There's a mechanical law in time that says if we have a prior swing and you get to the next buy time and you're higher than that prior swing, it tends to do this. This example is in 2016. This just happened recently. And we call that a pattern 5 or an inversion pattern. So Bill, inside of natural law, our inversions or backwards movements. Gann referred to these and said inversion signals are the largest moves. Well, they mark the ends of trends. They mark the ends of trends. And so on this chart now, using the size of the moon in the sky and a pattern that seems to emerge from time, we have a reversal or an inversion that seems to usually mark the end of a trend, and that absolute high ends up being a pattern we discovered 7 years ago. Now, if you come back and look at a chart from Wells Wilder's own book, he missed this. In fact, he fudged his results to sort of explain away the inversions. So here's a market delta chart, for example. A lot of these guys came really close, but they didn't commit fully to the insanity of time. Gann probably came the closest, and I suspect if he had a computer, he might have gotten where we are now. But Bill, check it out. You have all the predictive sell times up top. This was T-bonds in 1997. And you have all the predictive buy times on the bottom. But Bill, in this instance, look, when he had the signal for the 20th, look where he told people it actually came in. So Bill, he had told everyone in the book that the date was going to be on this day. But he eventually shows it a week later saying, oh, it came in eventually. But Bill, if we use the definition of the book that I developed, can you see how the buying signal is at the absolute high, the candle to the right of it, and it peels away and comes down? If we knew this definition in 1980, then Wilder would have been a genius. All of his signals would have worked, more or less. Does that make sense? And there's another example. It happens at the selling signals. If you arrive at a time that was supposed to be a selling time, and structurally the candle to the left or right, are brand new lows, the market tends to invert and go in the other direction. Inversions. So now come over here, and you'll see that same thing take place. Where he has number 4, it's over here, and you said, look, Bill, it came in early. It came in early, but if you draw it to where it was supposed to be, watch. We have a prior swing low, a pullback, and then a drop through that low into a lower low. And this candle are both lower lows and pattern 4s. And do you see how it starts to fish hook out of the day he said was a selling time? And that lines up and corresponds exactly with our pattern. We acknowledge inversions in the fullness of timing. When we get to the date, we look at it to see if it qualifies for an inversion pattern, and if it does, we know how to treat it, versus saying, oh, it came in a little early. Oh, it came in a little late. They didn't know how to handle natural law. But I come at it from an engineering perspective where if I treat time like a wave, I know how waves work. Acoustically, visually, waves follow laws. And so Wilder was close, but no banana. So we can use ridiculous things and see with relative certainty what NVIDIA is likely to do, right? So if we do the same thing and we buy NVIDIA and sell NVIDIA between the first quarter and the third quarter phases, right? We'll put the winners up top. And when NVIDIA was dropping, plus 25, plus 14, plus 6, plus 23, and now we're climbing all the way up, 11, 17, 7, 9, 10. The inversion we don't buy because it's a pattern 5. And as of right now, we're up 6. So here was 119 to 184, and we're plus 25, 14, 7, 23, 11, 17, 7, 9, and 10. We've caught almost every one of those pockets. And it's not exclusive to NVIDIA. Other markets are subject to the same signals. This is Apple using that same technique I just showed you. Does that make sense? We can look at Amazon with those same phases. Why does this seem to work? Why does this seem to? No, I don't care what stock you give me. Every one of them is influenced by this. Here, let's go back to my other buddy. There's Mr. Peter Thiel at Palantir. Bill, why does it work? Why is it doing that? I know why. I won't take us all down that rabbit hole. But boy, it sure feels weird. So Isaiah says, does this negate fundamental analysis? Woo. Does this negate fundamental analysis? Man, we could really go down this hole. We were just looking at a BNB chart for Binance earlier today. It's the same thing. So let's go back to Bitcoin. All right, I know a lot of you have positions with Binance right now ever since our good friend got pardoned for fraud, along with everyone else who committed fraud. So Isaiah, let's start here and work backwards. Can we agree mutually that there appears to be a predictive element of cause and effect on this chart that is not exclusive to recently, that's been happening for some time in blockchain? What do you think? Yes and yes. Okay. And Bala, if we look at different markets like UNH, I have 10 years of data loaded here. I should probably limit it to 1 to take it a little easier on my computer. Bala, there's UNH. And we'll look at Ford. Does there seem to be an element of it there as well? Yes. Okay, so let's go back to Bitcoin. Why this is happening and the laws that emerge from it are obfuscated at first and then obvious after a while. To really drive this home, I want to show you another chart and then come back to this one, where we are in time. So this is the solar cycle. I can predict the amplitude of the move. Yes, we're not going to go into that here, but I can predict move amplitude as well because it's physics and not fundamentals. Yeah, it is cool. So when I started looking at this, and we can talk about the intraday stuff here as well. Again, it's not exclusive to daily stuff. We can use timing tools to analyze markets intraday, like the NASDAQ, for example. And these were the trades that we were taking this morning in our live room. These were actual setups that we saw take place in today's class that I have a recording of if no one believes me. And when we waited for the move at 10:26, it went up, and we waited for the move at 10:07, it went down. When we waited for the move at 9:28, it went down, and so on. So it's working intraday as well. The question that Isaiah and others wanted to know is why? Why? Everything on the planet Earth receives energy from what? Where do we get all of the energy to do the things that we do? The sun. Yes. And if you do a cursory search on ChatGPT or Claude or Bing or any of those other things, and you analyze what happens when there's more of it and what happens when there's less of it, we are confronted with some realities. So for example, let's just go into ChatGPT. When there is more sunshine or energy from the sun, are traders more likely to buy or sell? Short answer, more sunshine, people take more risk. Less sunshine, people get cautious. And so this equivocates to serotonin levels, it equivocates to dopamine levels, it equivocates to vitamin D and vitamin E and the things that your body produces. And so we start to look at the world through a different lens. Does that mean that we're pre-wired, like our telephones are, to receive charge from a wireless charger? How many of you have a cell phone with a wireless charger? And when you put it close to the charger, it starts to charge and gets faster, and it can calculate faster, and your apps run better. And if you leave it out and the battery starts to run down, it goes into battery saving mode, and you can't run as many apps, and the volume isn't as loud, and the screen gets dim. Did you know you're like that? How do we know that? Well, if it is the sun, we can track and see that the sun itself has solar phases. Your sun, our sun, my sun, has peaks and valleys. I don't want to see that. Just show me the stupid thing. Our sun is more active and less active over time. It has what are known as sunspots on its surface that erupt, and when those sunspots erupt, more energy is hurtled out omnidirectionally, depending on where the spot is, towards our planet. And so people have been tracking where the spots on the sun are, if there are any, and counting them. And so when you count the sunspots and put them on a graph, there are periods where it is hyperactive and periods where it is very quiet. No one taught us this in school, by the way. Not my school. So when we come back and look at this chart, some really neat things start to happen. Bill, if we think of the sunspot highs as sell signals and the sunspot lows as buy signals, right? So I'm just going to put red dots here, right? And green dots here. I'll change the color. Is there an element of predictability if we know on average how large the cycles are between the highs and the lows? Think about that. Solar storms and geomagnetic storms lead to crashes in the markets every single time. Yes. Well, what I started to notice when I leaned into this is that the recessions are occurring most of the time just after the solar peaks. These gray lines are recessions and depressions. Bala asked, what about the Fed and the Fed rate cut? So Bala, do you notice that when we get to the right side of the solar high, just like a moon phase, just like a apogee-perigee phase, do you see where the recessions kick in? That's kind of weird, right? Let me stop here. Any questions? No one teaches us this. The guy who wanted us to know about it, the richest dude on the planet, was laughing all the way to his bank. So, Bill, the same things we saw on a 2-week cycle are happening on a 12-month cycle, a 12-year cycle, forgive me. So do you see the leap between what we were doing with Bitcoin a minute ago and what seems to be happening over here on a much larger scale when we zoom out a little bit? Now, Bala, remember we were talking about the pattern 5 when the market is at an all-time high at a buy signal. If this is a buying time and we're at an all-time high, what does it tend to do? It tends to revert like the NVIDIA signal, remember? Yeah. So now here's what happens on a solar scale. Right here is the depression. You see how it's at the bottom where the green dot is, where the buy time is? The market prior to the Great Depression was at an all-time high, right at the buying time. And what did it do? It crashed. There's 2 other times in history that it did that, and we were alive for all of them. Watch. In 2008, the market was at an all-time high. Right here, Bala. At a buying time in the solar cycle, the market on a weekly, monthly scale was at a pattern 5 in 2008. And it did exactly what we see intraday. It crashed. When I figured this out, this was when we started the company. When I figured out the rule and I understood the mechanics behind it, I put my money where my mouth was in 2020. Because in 2020, we came into the next dip. The market was at an all-time high. And so what I'm going to do is put this link in the chat box if you guys want to go back and watch it. And I promise this has implications intraday. If you'll stay with me, I didn't intend on going down the rabbit hole, but here we are. This was 2020 on the right-hand side, and these were the charts from 2008, 2009. And so, Bala, when we came in to the solar minimum, which was right here, it was a buy time, and the market was at an all-time high. And it crashed. When we came into it again, the structure of the market was the same. We had a buy time coming into 2020 in the solar cycle, Bill. It was the bottom. We had 0 sunspots We had 0 sunspots, and it was a pattern 5. And we crashed. Fun fact, right now, we are at the same point in time. And the same things have been happening, and we're at an all-time high, but this time at a sell signal. I'm going to take our signals off the chart here. And I want you guys to see the similarities between all 3 of these, because it's happening right now. Like there, right there, perfect. The current graph, the current chart is right here. Bill, we're on the right side of the red dot. We're at the maximum of the solar cycle. And here's what I want you to see the similarities are. We had a double bottom period right here. We had a double bottom period right here. We had a double bottom period right here. Then we have up here the return to the mean. You have a parabolic launch, parabolic launch, parabolic launch, and then the mean return. So Bill, Bala, can you see how it keeps coming down to the same level and then goes up and makes a brand new high? It keeps coming down to the same level, goes up and makes a brand new high. Keeps coming down to the same level, goes up and makes a brand new high. This is 2025. This is 2020. This is 2008, 2009. This signal was a solar buy time pattern 5. This signal was a solar buy signal pattern 5. This signal, ladies and gentlemen, is a solar sell signal pattern 2. It is a regular, pure, unadulterated sell signal right here. So what do we know is happening right now? I'll tell you that, because it's not what they're saying on TV. In the third quarter of 2025, the overall mortgage delinquency rates for 1 to 4 unit residential properties were 4%, representing an increase from the previous quarter. This number is near pre-pandemic levels. Okay, ready? Overall 90-day delinquency at 5% and subprime rates as high as 6.65%. We're eclipsing the 2020 and 2008 car payment delinquency rates right now. Record number of subprime borrowers missed car loan payments in October. Here comes number 3, ready? Data indicates a rising trend in Americans borrowing from or making early withdrawals from their 401k plans, primarily due to ongoing financial pressures and emergencies like high interest debt, medical bills, or housing needs. They're called hardship withdrawals, and they're at an all-time record high right now. There's a new trend in Arizona. They're taking new homes in Arizona that are 3-bedroom, 2-bath, and they're converting them into 6-bedroom, 2-bath with 2 refrigerators and 2 stoves. They're also introducing the 50-year mortgage because no one can buy a house. And there are two ways to get out of debt if you're the government. And the one way that there are four other empires in history that have been in the exact same position we've been in. You guys know who they are? And they've all done the same thing that we're doing right now. The last one was Britain. The one before that was Spain. The one before that was Rome, and I'm missing one. And all of them did the same thing. Devalued their currency, i.e. inflation. In order to pay off the loans on the $30+ trillion worth of debt that we have, the Federal Reserve cannot lower interest rates. If they lower interest rates, the economy heats up again. If it heats up again, then they can't calm it down. They have to keep the interest rates where they are because the government is about to print the most money it's ever printed. It just released $150 billion into the market right now. They're firing up the printing press. The same thing happened in the 40s. The same thing happened in the 70s. It is decades of inflation. More dollars means it's cheaper to pay off the debt. More people are paying more money. They're raising money through the tariffs. That's all going towards the debt. So they want you to think everything is great. And I'm showing you this chart right here. Now it goes beyond that. If you'll come with me one more notch in the belt, this is the more concerning thing. At the peak, we have the Chinese Civil War. We have World War II, Pearl Harbor. We have the Israeli War of Independence and the Korean War. The next cycle was the Vietnam War. This was when the Soviet Union invaded Czechoslovakia. This was when the Soviet Union invaded Afghanistan. 2015 was when the Russians invaded Ukraine. This is the Iran-Iraq War. This is the Rwandan genocide, the Bosnian genocide, and when Iraq invaded Kuwait. This is 9/11. Operation Enduring Freedom, Operation Iraqi Freedom. You know where we are right now in the big cycle of things? Where stuff gets blown up, where big wars happen. It is no coincidence that the entire US Navy is firing at boats outside of Venezuela. The same time Colin Powell was telling us that there were weapons of mass destruction in a mobile lab in a train somewhere in Iraq. These are opportunities in geopolitical history where governments expand their borders, take over things, and use the military because people are at an all-time fearful high. This is the time that stuff happens. And it's unfolding and unfurling around us as we speak. So we're told one thing while the other thing is happening in real time. And I don't want it to be a political thing. The way that I prove that this is happening, by showing you the free stuff, of course, with those phases and the solar stuff. I published the times that markets are likely to go up or down in the future before the webinar. And so I'm going to paste that link into the GoToWebinar chat box. And I want you to see something really cool. When you know how time works and you acknowledge that it can work, you scroll down on this chart and you'll see forecasts for Tuesday and for Wednesday. Forecasts for Tuesday and for Wednesday. Intraday signals for the E-mini S&P, for the NASDAQ. So if I scroll back to yesterday, these are the NASDAQ times for Wednesday. I'll autofocus here. These are the NASDAQ times for Tuesday. If I scroll and we look at the E-mini S&P on a 5-minute chart, which is what we usually look at for Tuesday. What date is that? The 4th, that's today. The 3rd, the 2nd. Is this the 2nd? Yeah. If we go and look at that chart together, Tuesday the 2nd, E-mini S&P. Bill, this chart was published 4 days ago, right, everybody? 4 days ago. These times we've been waiting on for 4 days. This was what was predicted for Tuesday. So Bala, take a look. Using everything we knew so far. Can you see, Bill, the signal that says 9:15 and how 9:15 populates over here and how it says 8 o'clock Eastern and 8 o'clock Eastern populates over here? So the signals that were published on Sunday, when we arrived at those times on Tuesday, the software is publishing those times, right? So this is my way to show people that this is working at an intraday level using data mining, studying historical patterns instead of solar and lunar patterns. It's all the same thing. And so now if we look at this chart, this signal at 11:05 mark was published on Sunday. Bala, what happens when we arrive at a brand new high at a buy time on a solar chart for 12-year cycles, on a lunar chart, on a lunar distance chart? It's a pattern 5. And what happens at 11:05 on Tuesday, 2 days after the signals are published into the public domain? What happens when we arrive at 12:35 at a brand new swing high? It's a pattern 5. What happens at 3:15 when the market opens in the Asian session and Bill, we have a brand new low? It's a pattern 4. What happens at 6:40 when the candle just to the left of that signal populates and it's a brand new high? It's a pattern 5. I wanted to show you the big stuff, recession stuff, huge NVIDIA reversal stuff, to show you that it's universal. And I can tell the software to automatically populate those signals for me because the rules are mechanical. I can give them all numbers. And so now Bala, the program, in this case Warp for NinjaTrader, will automatically draw a blue arrow on that candle when it populates. Will automatically draw a blue arrow on that candle when it populates and puts a number 5 there. At 11:40, Bala, it puts 2 white arrows and a number 4 and says, hey, it's probably going to go up here. See how crazy that is? And so now, with a working knowledge of that program, look at what happens at the signal times when we understand how nature works and people work and how behaviors change based on energy. We have an answer key. Number 1 says we're waiting for the market to go up from 4:55 until 6 a.m. on Tuesday. 2 o'clock, pattern 2 at 6 o'clock says we should see selling or consolidation, what you guys called a reaccumulation phase here. And then we arrive at 6:40. And 6:40 says, uh-oh, brand new high, pattern 5. We should see the market drop now from 6:40 until 7:45. At 7:45, we finish higher than we started. Womp womp, it doesn't work. 8 o'clock is a pattern 1, which tells us the market should be higher by 9:15 than it was at 8 o'clock. And so that one works. 9:15, the program warns us before the report on Tuesday that the market should fall into what? 10 o'clock. And it does. 10 o'clock, we opened at 68.40. We go up until 68.48. We go up even higher to a brand new high on candle number 3 at 68.55. It's a 15-point move, nearly $600 per contract. That candle qualifies as what? A pattern 5. So it worked on candle number 2. Candle number 3 is a pattern 5, and the program says it's going to go down, and it does. We get to 10.50, it creeps and finishes where it starts. 11.05 is a pattern 5, just like our NVIDIA chart, just like our Lunar chart, just like our recession chart. It drops until the next time period. Candle number 1 is a brand new low. The software puts a white arrow underneath it and says, hey, you're going to go up until 12.35. Now, here's what's bananas about this. We already have the dates for the future. That's the current signal. And if I scrunch up the chart, these are the times for tomorrow, right here. Midnight Eastern through lunchtime tomorrow. I already have the next signals coming up. So whatever market we're looking at, in this case Bitcoin, whatever time frame we're watching, I always have an understanding of what's coming next potentially, right? Whatever market it is, there's Tesla on a 5-minute chart today. And I have the times for tomorrow right now. When do we place calls? When do we place puts? Here's the answer, or at least gives us some idea of when those moves are likely to occur. Yeah, you can, Bala. You can. 1, 2, 3, 5 trading. That was my go-to. I tend to, for the E-mini S&P, I find that there's a very strong correlation on the lunar charts that I'm leaning into more and more. I find that lately, especially, it's very correlated. So if you come up to here and you put the signals on there, it really is quite powerful. Let me show you what I mean. And I hope I'm not going too far over everybody's heads here. I wasn't sure what I was going to teach about today, so I'm sort of riffing a little bit. Hit apply. Yeah, there we go. Let's put a moving average on here. When you disconnect from fundamentals and you understand what banks understand about humanity, you are able to think predictively. When you're thinking predictively, you realize that all of the things they're telling us are meant to do the opposite. They want you to be buying instead of selling. They want you to be selling instead of buying, because that creates liquidity for them. Okay, so there we go. So Bala, these are the 4 phases of the moon on the E-mini S&P. Let's just load up 1 year. And can you see the effects of the signals up there? I keep adding too much data, sorry. And so it's as predictive as everything else. For some reason, it's just being weird right now. That's the one I lean into, but if I load the standard template that all the other warp charts are using, it still works. if we use a data mining signal, I want you to see what happened on the warp chart when we use the same signals you guys are learning about with me. Ball, see the signal on October 28th? And then the signal, just the candle just to the right of it, those are pattern fives. Just like the NVIDIA signal. So that same pattern that we saw for recessions, depressions, lunar phases, apogees, solar cycles has occurred on the daily chart for the E-mini S&P. And we're starting to see that effect, right? And now today and tomorrow are very important. If we make an all-time high on tomorrow's candle, here, let's get rid of all the drawings. Right here. So you can kind of call this the prior swing, right? Now that candle, Bala, the high of today is 68.8075. The high of yesterday was 68.73 So this candle is literally doing the same thing that this candle was doing, setting up. The blue finished higher into the white. The blue is finishing higher into the white. And so this could be, if you're an options trader, an opportunity to look for a put, or in the book that you have, the suggestion is to wait for it to violate the high and continue to go up. That's the way to trade a pattern five. So there's a very low risk short right here with the prior swing. I find they usually come up and trip the high and then come down. They'll run the stops right before they drop it. But that's a regular 7-14 swing strength 8 calendar. To see the numbers, you go into the indicator, Jerome, and where it says show signal dots only, you uncheck it. And that starts to bring the patterns in. Now we have the dots. If the numbers are buried or hidden, you can come into the signal accessory editor under patterns and just move the offset bigger. Make it 50 here instead of 10. And you'll see the numbers start to pop out. 200. No, you're welcome. That's a good question. So even on a daily chart, you can see that that pattern 5 is pretty dominant right now. Yeah, and now it's just a question of, like we were saying earlier, now you can load in those other instruments. So here's Ford, right? What was the other one you brought up? Ford was one, Amazon is another one. NVIDIA was the other guy. And I can see the dates in the future. And they're not based on what the dude at NVIDIA wants me to hear, because no one's talking about the fact that China's introduced free versions of DeepSeek that don't require expensive data centers, that can run off of personal computer-sized processing centers that other companies are starting to use for 1/10 of the cost. No one's talking about the Google chip now, which is equally powerful and far less expensive than the tens of thousands of chips that NVIDIA has pumped out into the market. All the things that you find out after the fact in the documentary and the movies that they drag out the actors for. So they'll bring out Michael Scott again from The Office to play Big Short Part 2. And so these charts are just showing the data. They're just showing the data. And what I like to do is just keep the patterns off and look at first at the raw signals. So Google will probably come up and tap its high on or after the 5th and then start to pull down. But there's a pattern 5 here. There's a pattern 5 here. There's a pattern 5 here. And if you load that other template that we were looking at, if you just wanted to go the free route, it's going to do 10 years worth of signals, unfortunately. There are the lunar apogee and perigee dates on Google. So if you saw that chart, knowing what you know, what's likely to happen between now and December 16th? Well, based on what usually happens, some form of consolidation with maybe a drop coming into December 15th, where the next rise is likely to occur. And you can see here, buying and selling, buying and selling, buying and selling, buying and selling, buying and selling. Yeah. So in the end, we're sort of left with this uncomfortable conclusion, right? If it's TradingView or if it's NinjaTrader. This was the chart we were looking at Binance before earlier. I had a customer that I did a mentoring session with. We have these dates and times sitting out here in the future, watching and waiting for things to potentially occur, right? We can use these natural laws that are giving us these insights into how markets work to figure out where the inflection points of these markets are likely to occur. And so it can be on Binance, it can be on the Trump coin. That's another one that people were asking me about earlier. Here are the predictive times and dates on Trump coin, and I can see out into the future on a daily chart when the buys and the sells are likely to occur. And you can see what happened on October 2nd, what happened on October 23rd, what happened on November 9th, and here we are on the 29th. Not much energy right here coming into the buying, which leads me to believe that December 8th is probably another push down. And you can see that more than half of the time, about half of the time, the selling signals are lining up with the exact highs just before the drops. So the question that we're kind of left with was the one that we started out the webinar with, which is, where is that question? Forgive me. Is trading about the past or the future? And I look at ADA. Yeah, sure. We can look whatever you want. ADA is right there. Isaiah, are you ready? Can I give you some higher level stuff for ADA that I see that I want you to see versus just the generic stuff we've been talking about? There's something happening in ADA that's a little different from what we said. I have a guide that we teach from in my class that I want to show you, if it's okay. There's a moment, Isaiah, where the signals start to invert and you go from backwards to backwards to backwards to backwards. It happens when the trend is reversing. This is a book for my students in my live class. And do you see the daily signal on November 10th, how it just goes down, down, down at a buy time? Almost like someone pulled the plug or the water's draining out of the bathtub when it should have been filling. This is an advanced technique. You see how in the diagram on the right-hand side, it kind of matches what's happening right here to right here. These are blue candles instead of red candles. Well, what happens is when you see that, it happens near trend reversals. And so inevitably it goes down until the next sell signal. And Bill, this is what we were talking about, Gann and Wilder, and how they missed some things. So it goes down into the next sell signal, which is a P4. So this is a P4. And then it comes up into the next buy signal, which is where we are right now. So I think the December 3rd signal is where we are in this diagram right here. I think we come back down to retest the low on ADA. And what happens is it goes backwards inside of this range. And right now it's going to put in, I think, a high right here. It'll come up and put in another high where we can come back and draw a trend line like this one. And eventually it usually closes above this trend line and starts to go up where the signals all start working normally again. But based on ADA, I'm seeing the beginning of the sequence, the pattern 4 where the signal came up instead of going down. And now on December 3rd, it's starting to go down. These are one of those things we can rely on because it's physics, not fundamental. And before that, Isaiah, look, see how it was normal? Up on the 24th, down on the 2nd, up on the 20th, down on the 29th. And it was working. So there's a master key. I'll show you that I reference. I call it my answer key. And I can see where we are in a cycle based on that. I'll take a screenshot and get it to you here. This is probably the most important page of the book that I give to people. And so I look at the behavior of the signals in relation to that, and it usually tells me where we are in the cycle. So that link is in the chat box. Did that help at all, Isaiah? You could invert it, and it very much resembles an inverted head and shoulders pattern on the bottom and on the top. Good catch on that. All right, cool. Well, I'm going to bring you guys full circle and just basically say thank you for hanging out with me today. I ran a little bit over, but I wanted to go into the fundamentals of why timing works. It's not some black box proprietary hoo-ha that most of us had to deal with and go through to find stuff that works. These signals have a history, a legacy that emanates from the pores, if you will, of the universe. The great men like Gann and Wilder and Euler came close, but unless you stare at that same blade of grass for almost 20 years now, like we have, you miss some of the details when you go back and watch a movie a second time and go, oh yeah, I never noticed that. Well, we notice just about everything here. And so there are solutions for you that are predictive as opposed to lagging that I find easier to trade because I know they're coming. And the disadvantage of every other way but this is you don't know when those things, those moments, those indications will come. And so you're constantly on your heels, reacting, waiting, sitting in front of a computer all day. I think we offer a better alternative. If I usually have a really good way to remember this, just check your assumptions today. We kind of threw a lot of stuff out there, and we see things the way they are because that's how we think they should be. And then we come along and we look at a chart like this, and I give you the answers, and I'm publishing in our social media long before the drop happened in Bitcoin that it was coming, and long before the recovery occurred that it would. I have nothing left to prove other than to tell people who are looking for the answers, why is this happening? Why they're happening. You are a cell phone with about 3 miles of wires wrapped around you, and you are tuned to a giant wireless charger that's millions of miles away, a giant fusion reaction that sustains life from an organic molecular level up through the largest mammals and reptiles here. And the people who know this about you don't ever want you to realize that they know that it's happening. They are content that you are content to watch Jim Cramer and Mad Money and read your AARP investment article, and Frank on the 9th hole thinks silver's ready to rally again. They love when you think that. Meanwhile, they're getting ready to short and getting ready to go long when you're getting ready to go long and getting ready to go short. And this is just one example of the kinds of things that are available to you when you consider time as an option. You can find out more about our company and schedule demonstrations with traders who are using the program at backtothefuturetrading.com. You can take our product walkthrough and learn a little bit more about us. If you want to learn about our staff and who we are and the team that's involved here, really great bunch of guys that are working together. That's me. Look how happy I look there. And we want to look about the individual tools. Just click on trading tools. The stuff for NinjaTrader, that's data mining. You can click on learn more and find out more about the pricing and the program and what's included. If you're a TradingView person, you're going to scroll down just a little bit and click on learn more and find out about Chronos and how that can work for you. Thank you for your time. I appreciate you letting me go into some crazy stuff today. Wanted to give it some context and give you some bigger picture insights. I do wish you well. I am on your side. I am not a fraud. I'm not here to grab your money and run. The relationships we have with customers last years, some of you have been with me for decades. And if you don't feel comfortable with what I'm telling you, try something else. There are a million ways to skin this cat. We think this one is better. But if you think this is a bunch of malarkey and hokum and BS, you are welcome to that opinion. It is still hanging on by a thread, still a free country. And I do hope you find something that works well for you. We have a near perfect rating with Trustpilot, now going on almost 18 years this May. And we're proud of the legacy we have with the customers we work with. May the wind be at your back. May the sun shine upon your face. May the mountains lay low before you and the valleys rise up to meet you on your journey. I am proud that you sat here and learned something today. Learning is not in vogue anymore. If you're not scrolling from cat video to guy getting punched in face video, the world has no use for you lately. We're getting dumber. I can feel it. And you learned something today. I'm proud of you. That's an important milestone for traders. You're always learning. This is an unsolvable puzzle that just never gets easier and draws you deeper in. And I hope that I was able to offer some insight and illumination into this ever-changing financial Rubik's Cube we spin around in our financial fingers. And I'm grateful that you were here, and I hope you have a great weekend. If you want more information, let me know, Michael at backtothefuturetrading.com. Otherwise, take our product walkthrough, schedule a demo, and we'd love to have you on board as a customer. Take care, everybody. Bye-bye.